Hi, folks. This is Julian McCree, and welcome to another episode of Trader Cafe. Now, you can see I don't think my guest needs any introduction whatsoever. Welcome, Shukri. How are you, mate?
I'm good. I'm very good now. When
Brilliant.
when when yeah, when the balance of one of your accounts increases by 100,000 in a week, life is good.
More on that later, folks. So look, I think it's been a little while since Shukri's been on this show, so this is a good opportunity. I have heaps of questions, right? So I'm going to, if you would allow me, I am going to ask you some very simple questions. We're going to go back to basics
Sure.
with the crypto space and what is going on, and maybe just I guess from my perspective, help me out a little bit about what the digital currency revolution is all about. So everybody tells me that this is a profound revolution. We're in the beginning stages. We haven't really got started yet, and maybe we can talk about DeFi later on as well too, decentralized finance and what that means. You know, I've had commentators saying to me, or not saying to me, I've been reading about it recently, saying to me that that this is possibly a cultural shift that is up there with the invention of paper money and Genghis Khan in the 13th century, right? So in terms of the structural and cultural significance of what's going on, I know that sounds a little bit melodramatic, but is it? So there's
Yes.
anyway, folks. So look. What we're going to do today is we've got 45, 50 minutes to go through the world of what that all means from zero to the invention of the latest flying car. So look, why don't we get started and just start off with what is crypto?
Okay, crypto is basically money that is created inside the computer. Okay, initially this happened it didn't happen in 2008. Bitcoin was not really the first cryptocurrency or digital currency, whatever. It was way before that, way before that, sometime in the 1990s. Bitcoin was just something that worked. It kind of worked, it stopped this problem of something they call double spending, when you send something and then you send something else, people double spend. It solved that major problem that made this possible. Now, let me tell you why it was created. You're right, it's a cultural revolution. If you look at what, 2008, that was the time of the great financial depression, or the great financial crisis of 2008, the subprime thing, right? People were angry, right? And at that time, there was a guy that, people were shorting the market. The market was going down, and people lost a lot of money. And after that, Ben Bernanke became the chairman of the Fed. He then initiated this quantitative easing. Suddenly, the US was printing more money, and money was being devalued. And people didn't like that. And I still remember that time. I didn't fully understand it. But the Malaysian ringgit at that time went from 3.8 to below 3. It went to about 280 or something like that. That was because the US dollar was being devalued. So what happened then was that a group of people just did not like that because there's too money being printed. Bitcoin came out, and Bitcoin was limited in supply. And it was only an experiment. Nobody took it seriously. In fact, there's only 21 million, about 6 million Bitcoin are lost forever because they lost their computers. It wasn't anything serious. It was just a joke, And now it's not a joke, right? I think one of the things that will forever go down is in Bitcoin folklore is that, I forgot, was it 4,000 or 40,000 Bitcoin, whatever, was used to buy a pizza. And some guy from Britain actually paid $40 for it. The British are very clever. I hope he still has those Bitcoins. So, guys, the reality is this. When you talk about all these Bitcoins a long time ago, yes, a lot of people bought it. The reality is they lost it. The computer is gone. The computer is not working. There's even someone who said that, hey, I have my computer. My drive is somewhere inside this place where all the rubbish is. Can you guys find it? And I'll have a reward for you.
So that was how it started then, as almost like a rebellion currency, right?
Yes.
So
Yes.
so how then did we get to here? Because it's not just about the price of this thing going up and up and up. So something changed, right?
Yeah, correct. Now, what happened was it gained in popularity for the wrong reasons. And I think this is one of the kind of urban legends, right? It was used for a lot of money laundering because you didn't know who it was. You just didn't know. And it really went into prominence when WikiLeaks, when the founder was caught to finance the crowdfunding, they used Bitcoin. Okay, and it was used for a lot of illegal trading and all that, the dark web and all that. And then there was a hack and all that. So it came to prominence for the wrong reason, not actually cool, but suddenly it came to the mainstream. Hey, there's this something called Bitcoin and it's actually worth something, it actually worth something. So then all the guys then started to experiment with it and they come out with a lot of more applications for it. And this was around 2014. Now then it was all about Bitcoin, right? But Bitcoin is like gold. It doesn't do anything. It's just a store of value. Then a smart kid at that time, I think he was at 17 years old, Vitalik Buterin came up with Ethereum. And you can make it programmable. You can make it like software code and it can do many, many things. And that was the start of Ethereum. And that's why they call Ethereum programmable money. I know that the intention of Bitcoin was always as money, but now people don't look at it as a currency or money or even as a medium of exchange. Nobody looks at it as, nobody regards it as that. Bitcoin is like gold. And I know, and I was in the trader show last week, right? The 6 o'clock show. I just said, Jeff, Bitcoin is the most boring thing to me because it's so not volatile. And for crypto traders, it's not volatile. When we want to keep something when we want to go to, you don't necessarily have to go to the US dollar. We keep it in Bitcoin. To us, it's less volatile. But I know if you come out in this world, into our world of digital currency and cryptos, you see Bitcoin is very volatile, right? For us, this is normal.
Which is an interesting statement in its own right. So I guess you're saying, so Ethereum then came along as being the, if you like, the second major currency. That would be second major coin. That would be my way of, I'm very conscious of Bitcoin, but I'm also conscious of the supply challenges around that, right? And maybe it goes up in value, maybe it doesn't, who knows?
Yes, correct.
But for me, Ethereum is like the workhorse of the digital space, right?
Correct. There's so many applications for Ethereum that time, and they also did something at that time called an ICO, initial coin offering. Ethereum was one of the first. So suddenly there was a new way to raise money in order to do research for all of this. And if you look at the major currencies now, a lot of them actually came from the Ethereum gang. For example, there's a company called Consensus, Robert Lubin. He came from the Ethereum. Polkadot is a major cryptocurrency there. Okay, he was from Ethereum. Cardano, which is the hottest coin in the world like now, okay, that one came from Ethereum also. So everyone that became kind of alumni of Ethereum have gone on to actually recreate the cryptocurrency world. And they do it in ways.
So let me get this straight. So we've gone for Bitcoin, we then had Ethereum, and then we've had all the derivatives, I guess, I'll stop using the derivatives, the second set of currency, the subcoins off that, right?
Subcoins, yeah.
So then within the industry itself, it seems to me that so let me get this right. There's exchanges.
Yes.
You can lend digital currency. Yes. I guess that means that you can, if you're lending it, then somebody's borrowing it, and they're obviously paying an interest rate on that.
Yes.
You've got derivatives on it as well too.
Yes.
So that must mean that you're getting a yield, right? I've heard the talk of you get somewhere between vaguely 2% up to even 40% in some cases, but the average is about 10, I think, isn't it? 10%.
Correct. Around there, yeah. To lend money. But here's where it gets weird, okay? Here's where it really gets weird. Now, I don't like this, but people have fun with it. Now, here's the deal. I have Ethereum. I lend you Ethereum, I get a yield, right? I lend anyone Ethereum, so I get a yield. You know what I do after that? I borrow it back. I pay back the interest. Here's the weird thing. Now, I might lend, now just say this is a currency X. I lend it to someone I make 10%. Not only do I make 10%, I get more rewards in terms of currency X. I get 2 yields here. Now, what I do now, I borrow that currency back, 12%. On the face of it, it looks like I'm losing 2%. But you know what? When I borrow to you, I get currency X. When I lend, when I lend to you, I get currency X. When I borrow back the money, I get currency X too.
So this is like a bonus, right?
Yes, this is like a bonus. So now people are like motivated to lend out currency and borrow it back.
And you can do all of this, right? Because
yes.
every time you do a transaction, the transaction is tokenized, right?
Yes, yes.
So how secure are those transactions?
Okay, it is quite dangerous, and that's why when we talk about DeFi, there's something called an audit. Okay, before for all these big protocols or whatever, they usually have a security audit to make sure that their protocols, are not breached. But nothing's perfect. I think the hackers are always one step ahead. There'll always be a hack. So then they introduce something now called insurance. And with insurance, even when I borrow and lend, I can even buy insurance so that anything, if it happens to the smart contract, I'll get refunded on that. So this makes it much safer. Yeah.
So you can do the tokenization. But if somebody horribly, right? If somebody steals it, I guess there's only ever a certain percentage gets stolen, right? So what they're saying is you can then do a group insurance on the whole lot and make money out of insuring against a hack, right?
Yes. And if you look at a lot of big exchanges, right? I mean, I'm at the point where I keep a lot of cryptos in exchanges, and somebody calls me, okay, it's been hacked. Hey, go to sleep. And tomorrow everything's okay. You might not be able to withdraw money for the past 2 weeks or whatever, but when the insurance kicks in, everything's back to normal again. It's as if nothing had happened. I don't lose sleep over that anymore. In 2017, when I started, it's, oh no, where's my crypto? No, I cannot get into the exchange. Is it still there? Now, no more. We've advanced by quite a lot.
So who's doing the insurance then? Is that like a special crypto insurance company, or is it like the majors are involved in that?
It's the special crypto insurance companies, and some of them even have tie-up to the majors to do this.
Wow.
Yeah, it's very advanced. It's like a new world altogether where the interest can be very high. And in addition to interest, you also get rewards. Now, before this, Julian, the problem is, I have to stake the coin. I have to borrow. There's so many transactions I can do, right? Nowadays, I can even go and lend you money. I can borrow back the money. I can restake the thing, get rewards from everywhere, automated.
Automated.
Not only that, once my overall yield or return goes below a certain threshold, I say, no, I don't like this. It will then try to find another farm or cryptocurrency farm to do the same thing, so that I always get the highest yield available.
Wow.
Amazing.
Wow. Okay. So, okay.
It's like you cannot figure it out, right? You have to be in this. It's amazing. It really is. But the problem is a lot of people are taking too much risk now, because if the market goes down, and it's always because of greed. It's always because of greed, because when here's the thing, right? Here's what happens, right? It's okay to borrow and lend. Okay, if I get interest from lending you money, I borrow that money back, it's okay. But a lot of people with the borrowed money, they try to speculate on what we call all the speculative coins. When that happens, the margin of borrowing or whatever goes down, and the position has to be liquidated, everything. Now, if you had that borrowed money and put it in another farm at a low yield, everything will be okay. But as you know, people in our space sometimes get too greedy. They always get caught out.
I'm pretty sure people are greedy in whatever space you happen to be in. I think there's not a, I don't think crypto has a particular monopoly on greed. That's for sure. So let's take a step back then and look at what this decentralized finance is. So I've got some figures.
Yeah.
Actually, I have been doing some homework. So yeah. I got some figures. They were saying that DeFi back in February 2020 was worth about $2 billion.
Correct.
Now they say it's worth about $75 billion.
Yes.
Right. So this is why I'm sort of, this is where I get interested, right? And so for me, I'm beginning to think big picture stuff now.
Yes, correct.
Now, this is big money. Now, okay, it's not small beer, it's big money. Yes. Regardless of valuations, right, the industry is self-perpetuating. If, say, the average yield that everybody's getting is 10%, then by definition, over the course of 3 to 4 years, you're doubling, you've added 50% to the whole pot anyway.
Yes.
Without any price movements, right, even if it stays absolutely the same. So one of the things that I'm trying to get through in my head is how is this going to work with central banks? When you turn around to the Fed or to the Bank of England or the Chinese central bank, and you're saying, look, we're going to do something completely different. It's in the shadows. There's very little regulation, and you're not going to have control of the transactions that you would otherwise have control of, because you're not, it's not your currency. It's somebody. Yeah. It's a universal currency.
Yes. Correct.
What do you think the implications of that are?
Okay, this is what's happening. Okay, and of course you have to start with the U.S. And the U.S. is basically asking people to get regulated. They want things on DeFi to be truly DeFi. They are looking at stable coins. You're right. It's not the currency. It's just pegged to the U.S. dollar. So they're saying, like, you, Julian, I'm the central bank. Julian, what is this? You're creating all this currency. And this is an example, right? And hey, your currency seems to be backed by Chinese paper. This is not good. Julian, can you start buying American paper? Be like an American. So then you be like an American. But, you're right, the shadow thing. And then I say, Julian, what's going on here? And Julian, you say, you know what? I have this big base. I want to be regulated. That's what the companies are saying, like Coinbase, Circle, and that. We are ready to be regulated by the Federal Reserve. So it's like they created this big monster. It becomes so big that if this ecosystem were destroyed, many people would get affected. And now they're saying, I'm ready to be regulated. So now there are even audits. They're going, are you really backed 1-to-1 to the US dollar and all that? That's what's happening now. And
this is really interesting, because this takes me back a little bit, because I'm not young. So and when I think about how the world works, this reminds me, as we're talking, of the Eurodollar system, right? So back in the early 70s, essentially what happened is people, because the US is the most important place in the world, people were acquiring dollars. There was a lot of trade going on, and people were acquiring dollars in overseas banks. They didn't really know what to do with them. So what happened is the banks started to swap them between themselves without going through the Federal Reserve Bank of New York and making it, if you like, a domestic dollar transaction. So they created these offshore dollars, which is, and that grew over the course of the next 30 to 40 years into, you want the definition of a monster, you've got it, because it actually dwarfs the domestic dollar market, right? The Eurodollar market's enormous. So is this what you're seeing, the same thing happening? There was a need, it's been created to solve a problem, right? At the end of the day, this is coming to solve a problem. So if we walk backwards, the Eurodollar came out of the US coming off the gold standard, right? And people were worried about at the time the dollar devaluation. That was one part of it, but equally there were a lot of dollars in the system that weren't on shore, if you like, in the US. So they just started lending and borrowing between themselves, right? The Middle East would be a classic example, right? They dig up oil, they get paid for it. What are they going to do with it? They go and buy US treasuries, right? Well, no, they wanted to actually lend money out to other organizations, and they then had all those dollars. They said, well, I'll lend you some dollars and get paid for it, right? This sounds, as we're describing it, an exact thing. Although in those days, the way you were doing it was via a traditional bank, right? So it was a bank that everybody knew and loved, but in terms of regulation, if you like, it was sort of tended to be a bit off balance sheet. So, in the shadows, so to speak. And I think here we go again, right? This is another form. So the challenge I've got with this, right, is I'm understanding this and I'm absolutely getting it now. This actually makes a lot more sense to me. And so when you add in this need, what's the reaction going to be? I get it that Coinbase and Binance are asking to be, we've seen them in the news. The Justice Department's running all over them. And I'm sure they'll give up their data or whatever they need to do, right, to ensure that they stay the right side of the regulators, because they don't want to be shut down. But they also need to have credibility, right? So because this is still, in my mind, the Wild West. And when people first started to do Eurodollar transactions in the 70s, it was the Wild West. Your only source of comfort was the fact that it was a bank, right? It was a registered bank. You didn't necessarily know if it was you had lots of registered banks in the Cayman Islands, but it was a registered bank and yada, yada. Anyway, so now we're not there. Now we've got a different entity, a different series of exchanges that are doing the identical thing. Right. So it's in the shadows now. The Eurodollar market grew to be trillions and trillions of US dollar equivalent, right? It's enormous. It dwarfs the domestic dollar market. One of the challenges that I've always had about inflation is that you don't just look at what's going on to US dollar, the US dollar domestic market. You've got to take the Eurodollars into account, right? And the Eurodollar market hasn't been growing in size for the last 12 years, right? It's static. What has been growing in size the last 5 years is the digital coin market. So then, okay, so two questions, and maybe, that I've got around this, right? So number one, this has to go to a point at which the central banks of the world go, we don't like this because we're starting to lose control. That's sort of question. Please comment around that area. And who's going to be first off who's the first cab off the rank to say no? I always feel the US dollar will be the last one, right? The Fed will be the last guys. And then secondly, let's start to open the conversation up around, is it just a digital, what does it do? Can you use this for anything? And is now when we start to talk about the dollar as the reserve currency, are we now saying that digital currency offers an alternative? You can pay for things in Ethereum, right? Because actually it's as stable. When you go and get a letter of credit or a trade finance slip from a bank, they'll happily charge you 20 basis points on the transaction. This way, it could be a basis point. See, it's almost like, this is the great leap forward, right? Is that you've lowering transaction costs for the real world. So sorry, I'll stop asking questions.
So when you stop about that, when you talk about, all the central authorities coming through, yes, China is scared. China is scared of Bitcoin because they're coming out with a digital yuan. So, they shut off all the Bitcoin miners, turning off electricity, bringing the Bitcoin hash rate or producing rate down, basically engineering the crash earlier in May. But now everything seems to be recovered because the Chinese have moved into countries like the USA, Texas, Maryland, giving very cheap electricity, in addition to Kazakhstan, somewhere on that side. So the US is taking a different approach. The US is focusing more on regulation, and the head of the SEC, which is Gary Gensler, and he was the head of the CFTC. He's the head of the FCC now. Guess what? He used to teach blockchain in the Massachusetts Institute of Technology. So he taught about Bitcoin and digital currency. So he knows all about this. Now, I think there is going to be, it is going to take some time before the regulation becomes very clear. So we are going towards that. Definitely, we are going towards that. I think there are now, what he's arguing is, are you truly decentralized? Because it's not only about digital currency. Digital currency has to be decentralized. And I give you an example, something called Ripple. Ripple also did an ICO, okay? They raised money. What they did wrong was that they were selling the Ripple to finance themselves. That's wrong. What is true decentralization is that you give it to the community to decide its direction. And I think that is why people love this, because it allows the normal people like us to come in early. And that's why You hear about, the guy who's not wearing any shoes. Uh, I hope he's wearing a shirt and all that, who got into this early, becoming multi-millionaires because they were the brave that got in early, and these are really the whales. But yeah, it's a cultural movement because now, rather than the big boys, okay, we rely on the banks and we talk about forex, you talk about the big banks, the whales, the sharks. Now, the small guy, the big guys have to buy from the small guys. Like, we're like the kings now. You got to buy from us. We got in early. When we sell it to you guys, it's gone up 100 times. Take it. Okay, now, about Bitcoin or all these currencies being something truly useful, yes. It's only started, I think, in this round 2020. There were a lot of companies that wanted to do it in 2017, 2018. To be fair, 95% of those shut down. 90% were just scams. It's just total scams. They came out with a paper, I'm going to do this cryptocurrency, raise the money, ran away. Now, this is not illegal, but it's like a soft scam, right? I never intended for the company to be successful. I mean, I could be a single guy. I use your picture. Hey, here we are. We have a team. You raise the money and say, hey, guess what? We couldn't figure this out. We're shutting down. The money is gone. But now it seems that a lot of people are doing real stuff that we don't see. Yes, there are applications such as banking now going on, like Kraken, which is an exchange. It has a banking license from the US. Another one is Anchorage, already has a banking license. When you talk about Visa buying an NFT, a non-fungible token, it bought a CryptoPunks. It has never even bought Bitcoin before, but it bought a non-fungible token called CryptoPunks, and then it's storing it somewhere else. This is slowly coming up. When you talk about trade finance, there are companies that are coming out with a solution. I cannot vouch on how good they will be. Because to me, it's this. If you're the first generation, you're going to fail. It's like the dot-com boom of 1999, right? Only when it went down and it came up again, then we had the FANGs. So I think we are at the phase where the FANGs are coming out. We do not know yet. I do not know yet. So now the reality of this is really being driven by something that's called non-fungible tokens. And I think Visa has basically said that this is the way, because nobody thought they would buy a CryptoPunk, which is like a drawing. It's a JPEG drawing. It's ugly. It's totally ugly. And people are going for that because it represents ownership. And that's where I think the romanticism comes in. I'm not thinking now about real world applications. We are still in the romantic stage now, you know? And
interesting.
Yeah.
That's interesting because in my head, right? Yeah. When I so for instance, when I go down the shops these days, I pay for stuff with my Apple phone. I don't use my credit card anymore. Right. Now, as it happens, it goes straight through to my bank account, right?
Yes.
But what's to stop the because I know that Facebook came out with a digital coin, right? And the idea behind that was to keep everything within the Facebook ecosystem.
Yes.
Right. So this is now, say that Amazon, I'm sure they must be thinking about it, come out with a digital payment mechanism, because you put money into Amazon and you just do stuff with it, right? And then it almost becomes another bank.
Yeah.
And we saw this like 20 years ago with the supermarkets. They opened up their own banks.
Yeah.
Because they said, if you shop with us, say you shop with, Safeway or Walmart, right? You have a Walmart credit card, which means you're essentially keeping all the financial profits for themselves. Yes. But secondly, they give it to you at a better interest rate. They recycle it into better interest rates to make it more attractive to you, right?
Yeah.
So is this all part of the disintermediation process? Are we going to see this more? Are we going to see Amazon money? Yes. Are we going to see Facebook money if it ever comes back again? I guess it probably. I know it's had a couple of iterations. Yeah. They'll keep trying, I guess.
Yeah, they'll keep trying. They're trying. Yeah.
Are we going to see Apple money? Is this going to be the thing that we're going to constantly see? And then if these guys are presented, if you say that Amazon, for instance, right, has a digital currency of its own, it's sort of Amazon dollars, call it. It's not a long haul for them to say, right, well, if I'm I can then use that to finance trade with myself. So we'll lend it to people to buy products to put on Amazon, and you start to create your own ecosystem, don't you?
Yes, yes, you do. Now, the danger with that is that you have all these currencies, right? So we know that Facebook wanted to create DM, was it in 2019? It got shot down, right? Anything going with the regulators is going to take a long time. Amazon might come out with its own, but I think that the regular ones like USDC, USDT, Bitcoin, Ethereum will actually be the basis for all these. It's be like PayPal. You can now do transactions on PayPal using all these currencies, right? And why I think this is the way is because look at China. The most innovative man in China, Jack Ma. Now remember that he had his own ecosystem too, right? People, I have the app. I was looking at Alipay and I was also looking at Tencent. You can keep money there, And I was hearing that even that you get more interest there than the banks. And look what happened to Jack Ma.
Yeah.
So I think people are seeing now, if I want to do this, I better be regulated. That's why you have circles saying, hey, we're willing to be regulated. We are willing to follow the Fed and the direction of the Fed and the SEC. And that's what's happening now.
Okay, so you mentioned NFTs.
Yeah.
Actually, let's talk about, because we're doing okay for time. So let's talk about something called the DeFi Summer. What was that?
Oh, yeah. Okay, DeFi Summer is when you have basically the DeFi coins are going up. You saw the total value lock going up, right? So when the total value lock are going up, then you have a lot of people putting money in DeFi, and the protocols that hold this money, they generally go up many times, okay, like 10 times, 20 times, 100 times, and all of that. That is what is called a DeFi summer because all the tokens seem to go up at one time. Now, people say, now let's compare this. Okay, now you're in stocks, right, Julian? Now, the thing is, I'm in stocks, so I don't like stocks. I really don't like stocks because you really have to pick the right stock. One could be good, one could be bad, and then you have these results. Amazon could have a bad result, it tanks, and Netflix has good result, it goes up. A crypto summer or DeFi summer doesn't do like that. If you are in the same sector, it doesn't matter who's doing well or not, they go up at the same time. This is the difference between crypto. So in a sense, it is easier than a lot of investments that people know. It's just that people don't know this. And it goes down at the same time also because it can leave you broke. But the point is that it's much easier to invest. And before we had the DeFi summer, we had the NFT summer, and they're going up also.
Yeah, so let's talk about NFTs then. So the DeFi world, I think I get this now. Okay, you still, in my mind, I still have a question mark because it still seems like you need an exchange there, and maybe we'll come back to that at the very end. But so NFTs to me seem to be a digital. It's tokenized. Let's talk about tokenized art, right? To start,
correct,
right?
Correct.
But what you're doing, you're sort of taking an activity and tokenizing it, aren't you?
Yes, correct. You're putting it on the blockchain so that it becomes unique. See, I have a phone here. I can take a picture of a good art and put it here. But when I show it to my friend, it's just a picture. He doesn't know whether it's fake or whether it's true. But if I put it on the blockchain, I can prove to my friend that that's really mine, that I have some taste, that I brought the real thing. And because of it's unique, and there might be one of one, although there might be many variations, the value now is going up now to, things that are totally crazy. Now, when these arts come out, and I'm going to show you some examples here, since you talk about art, the price was only about, this is minting, right? When you produce the first art. And I'm going to show you something because this one is from, it's like Ethereum code, Ethereum code is generated into arts. I don't know what this is all about, but what I can tell you that when usually they came out, it's only about $150, $200. So cheap. Now let me get this site and I'm going to show you what it is now. And I'm going to show you basically the insanity that is coming around here. Let me arts block created. Let me share the screen now. Let's go. Okay, I'm going to share the screen now. So it started like $150, $200, right? That's art blocks curated. That is an NFT. The floor price is the minimum price. There are 37,200 items. Each is unique. Each has a certificate of ownership. You can know whether it's mine or not. The floor price here means the minimum price is like 6,000 US dollars. These started very cheap. Wow, right? And look at that. Look at that. The thing is not really in this is not really whether it's ugly or not. The thing is that it is unique. People want to own something totally unique. Now, let me show you something else, which is CryptoPunks. Have you seen a CryptoPunk? This is the group of NFTs that Citibank bought, okay? Let me see the stats here. So this is like an exchange. This is really like look, top NFTs, CryptoPunks. Let's go to CryptoPunks. Now, let me tell you why these are so valuable. Why Visa? Why in the world Visa bought this? Visa has never owned Bitcoin, okay? But they went into NFTs. Look at this price. Look at this. That's a CryptoPunk. What is this 21? Last transacted, this ugly dude cost 21, not $21, 21 Ethereum. That is 63,000 US dollars. The one Visa bought was only for 150,000. Okay, so look, this is 27 Ethereum. Why did they buy this? It's not because it's ugly or not, because I don't like it either. It looks like plain to me. It's because this was made in 2017. At that time, Julian, how much did this cost? Give a guess.
It doesn't look that expensive to me.
Yeah, it was free. It was an airdrop. It was given free to people. It was so bad, nobody wanted to buy it. Fast forward 4 years later, those who were lucky enough to get it are making crazy money of this. Why are people buying this? Because they say, look, again, the romanticism, right? Like you said, right? This is going to be this is a change in history. If you have a piece of that change in history, which is CryptoPunks, which had limited the number of these type of drawings to only 10,000, that means something. And that's why now they're selling for like 63,000 or whatever. That you're not going to get anything less, I think, for $40,000. You're just not going to get it. So that is where the romanticism comes in, because if I own this and I can show you my wallet, you can always look into my wallet. Whoa, this guy is the guy. This guy was there before. This guy has made it because he has a punk. And the good thing in the crypto world is if I give you the address of my wallet, you can see whatever is in my wallet. You can see the entire history. And that is something that you can't do elsewhere. I think Gary Vee said it best, number one influencer in tech. What he said was very simple. He said, look at Instagram. Everyone's using a filter. Everyone's so fake. Even the background, I can use a green screen, right? Nobody will know whether I'm in Timbuktu or Paris or whatever. But when you do this, he says that this will be a source of pride because your collection will represent you. And there's a lot of new terms. There's a lot of new terms, Julian. This is weird. This is why they say this is flexing.
So art traditionally, and I use those two words with a bit of a wink and a nudge. So the art traditionally seems to get valuable when the people that invent it sort of die, right?
Yes.
And so what you're saying is here, these things were created. This establishes a vintage, right? So you're saying they were done in 2017, if you like, a limited edition.
Yes.
People can, if they want to, you could duplicate this. So you can have like a print. We can do a print of a constable, right?
Yeah.
But the original, the original is sitting there in somebody's wallet, and now that has real value. This is a new art, right?
Yes, correct. It is the ownership. It's authenticity. Now, another thing that didn't sell well last time was called curio cards. Curio card. It's just a card. It's just by amateur artists. It's totally amateur artists. $100, $200 again. It's nothing there, right? But this costs like what? 1.78 is 3,000 now. This is almost like this is almost like no, this is 4,700. 4,000, just this. That's no big deal, right? No big deal. Hey, BTC, what is that? That's so ugly, but right, this is $4,500. What is this? I don't even know what this is. I don't even know whether this guy gets royalty or not. But look at what they're selling, because they were part of that vintage era, right? They were part of the beginning. And I like buying all these NFTs now, kind of build my collection now, because it doesn't matter, Julian. I'm looking at 4 years from now.
Yep. Yep. And look, that's the thing, right? That it's a bit like a Bitcoin. You're creating some rarity in there, aren't you?
Yes,
to say, well, you know, look, this is now has some value because it's original, and I know that it can't. My original version can't be copied, right? Because I've got a token, and that token says.
Yes.
One of the very interesting things that I think so. What I'm hearing and what I'm seeing this is how can I describe this? Does life get more genuine? Right? So there's no, so you can't, let's say you want to buy a Tesla, right?
Yeah.
And you want to buy a Tesla, but you're worried about, well, there isn't much cobalt in them anyway, but you're worried about the cobalt coming from the DRC, right?
Yes.
Because you don't agree, right? You don't agree with the DRC. It doesn't fit your political bias, right? Okay, and your values. So what you say to Tesla is, I tell you what, I want you to build a car with the batteries, but I want the cobalt to come from Australia.
Yes.
And Tesla now says that's okay because we can tokenize that cobalt. We know exactly where that piece of cobalt came from. Yeah, I guess you could argue it's held in a box, but it's a secure box. We know where that piece of cobalt has come from, and therefore what goes into your car is ethically acceptable. And if you want to pay more money for that, then that's fine. That's your call.
Correct.
But we can now prove that, right?
Yes.
So the world. So if you're almost anything.
Yes.
Even the physical stuff can now be tokenized, and you can now see. So this is different from the digital currencies. Let's park those for a minute. The technology is how it's going to have leakage into the real world, if that's the right. I'm not even allowed to use that expression, but you know what I mean, right? You're leaking this into the real world, into the supply chain, into the. You actually, for the first time, you can say to people, there's you want to buy gold. You want to know the origin of that gold.
Yes,
well, it comes from Alaska, right?
Yeah.
You can say it comes from the Yukon. I don't know, whatever, right? So, but you know where that gold comes from. It doesn't come from somewhere crazy where they're using mercury to mine it, and it's horrible.
Correct.
So this is how it's going to. This is going to be some of this change, right? That's going on. The technology will be utilized for the real world. I can just use the physical world. Let's say the physical world, not the real world. This is a real world, right? So this, to me, I think is really interesting, and I'm trying to, in my mind, one of my challenges around this is I've always been interested in buying the guys that sell the shovels.
Yes, pick and shovel.
Okay, so the product itself is interesting, and look, the prices of these things are going to go up, they're going to go down. Who knows? I don't. Okay, I could never profess knowing what's good and bad, but what I do know is as volumes rise, Coinbase is an attractive investment if volumes continue to rise. Right now,
correct.
You take out the speculation element of coin, and I don't know, right? Coinbase itself as a company, as an exchange, I think is a little bit. We can argue that one, seeing as most of its volume seems to come from what's the joke coin? Sorry, temporarily gone out of my head.
Doji.
Thank you, Dogecoin. Right? Exactly, right? And you hear, well, okay, the volume all comes out of that, right? So you go, okay. However, this is the guys that are selling the shovels, right? Yes. And so in my mind, what I'm looking for is to try and find investments for me, which are part of these guys. So I don't understand the complexity of this, but I understand the concept of the shovels, right? And I don't think that ever changes.
Yeah.
So for me, when I hear people who I trust talking about a cultural shift in the way that it did under Genghis Khan, and you're talking about changing from coins to paper money, okay, that gets my attention, because now this is a shift that isn't just somewhere living in its own space over here in the well, not in the even in the corner.
Yeah.
It's beginning to be mainstream, but it's living over
Correct.
here. It is now
Correct.
going to affect everything we do. So you're
Yeah.
going to, and then you say, well, who's it going to undermine? You know, I always keep going back to the banks, because those guys have to charge a lot of money to everybody to hold their money and to spend their money and to borrow their money, because they've got a big overhead, because they're regulated, because the Fed doesn't want banks to go under, because they've got to put all this capital up and that's expensive, yada, yada, yada. Anyway, long story short, they charge you a lot of money.
Yes.
In comes a tokenized, exchange, or even using the DeFi, right? You know, the way things work here is that you may find a way of disintermediating those organizations.
Yes.
Right? You talked about insurance, right? Well,
yes, correct.
Insurance in this industry seems to me to be like lowest cost insurance. Yeah, somebody's probably making some money out of it. And if you constantly improve the, if you like, the ecosystem, the security ecosystem, then that insurance should be more profitable to you over time, right? If you charge the same amount of money. But what you're doing is you're disintermediating other insurance companies who must be sitting there starting to sweat a bit, right? Because then you say, well, what's to stop these guys turning around saying, well, let's just disintermediate the whole insurance industry, and I'll start to do domestic house insurance now, because I can do that on a tokenized basis, and I've blown through the cost base of the insurance companies just like that, right? I can do it at half price.
Yeah. So this is the thing, right? I think when you talk about cobalt, they've done it for diamonds already. There are companies that are doing it for diamonds, so that you don't buy blood diamonds. You're right. And the blood and the diamonds can be sold for a premium. Now, when you say about companies being disintermediated, you see a change in heart. You know, you see JP Morgan was so against Bitcoin, but they also now have advisory services, right? For high net worth clients buying Bitcoin, which they're charging an arm and a leg for. I'm sure, right? And Goldman Sachs even has developed a blockchain for that, right? Now, what is going to happen when all these guys get disintermediated or feel disintermediated? I think it will be a case of the empire strikes back, but in a good way. They'll just buy all these companies. They're just going to buy all these companies again, because, when you set up a company, right, you have a liquidity pool of your tokens that has value. It has already happened where companies actually are buying those liquidity pool, where venture capitalists are actually going in and making offers to buy that entire liquidity pool. The problem is this is the big problem. Now you have another form of romanticism, which is being like started by Wall Street bets, right? You have the small guys who own the whole liquidity pool, because that's decentralized finance, and you have the big guys coming in. Because the small guys say, we don't want you in. But the big guys are making offers. Some want to cash out. Some don't want to cash out. I don't know the solution, but it is already happening now. And I don't know the resolution for that. I'm just going to leave that to Gary Gensler and the Fed Chairman Powell. Go and resolve that for us.
Hey, look, I think in my mind, on that note, we're going to leave this. Look. As always, Shukri, it's amazing talking to you. You work in a space that I'm not very familiar with. I feel very old whenever I talk to you, that I'm not involved in it enough. My children keep talking about it, and they keep saying to me, Dad, you've got to get more interested in this because the returns are amazing. You've got to start looking at this more. And I keep going, yeah. I've got to make the time for that, and because I know I've got about 3 months of heavy learning to do.
Yeah.
But look, thank you, Shukri.
Hey,
you're amazing.
Jules,
go on.
Jules,
one last thing. Here we go then.
Look at my collection. See, I'm collecting bulls. I'm collecting Lionel Messi. I don't know what I collected here. Some Shiba, Doji, whatever it is. Hey, I'm collecting this figure now, okay? So if you look at this is why NFTs work, Jules. This is also like an ICO or an early release of a token. But when you have this, I smile. Rather than looking at the charts, I get stressed. Up, down, up, down, up, down, up, down. When I look at this, it brings a smile to my face. And that's why you're right. It's coming to the real world now. This is something that we get familiar with. But at the bottom, it's all the same. It's all a fundraising exercise. Nothing changes, but this makes it more fun and makes it, and this is what I think is going to bring the masses in.
Yeah, look, when when the impressionists came along and changed the art world, literally they changed it. They went from being accurate to being to changing the way that people think about art by essentially defocusing it, right?
Yeah.
That was a significant change. And again with the modern era, and here we are again. All we've done is is go into what they're going to call this, the digital art period, will be the thing, right? And people will have the originals of some of these things up on the wall, and some of the Tate galleries will, you know, the big galleries in the world will have the ones that have been lent to them, right? Will sit there on a wall that have a picture of it. Now you might have a copy of that at home, and that might be your print of your Constable, right? I don't know, whatever it is, but you're still going to have, you know, this is creating a new world, right? And this is quite normal for the art world. They'll leave the old one behind because it's not very exciting, and this is exciting, right?
Yeah. Yeah.
And look, on that happy note, let's wrap it up. We've overrun already. Look, Shukri, as always, thank you, mate. I really appreciate it. I didn't want to talk about specific things today. I wanted to talk about the world of crypto, right. And hopefully we've covered a lot of ground. And listen, to everybody out there, as always, as I say at the end of this show, look, if you have been, thank you very much for listening, and I will see everybody soon. Shukri, you've been awesome. Thanks, man.
Thanks, man. Thank you, guys.